But time for our special segment, Quarter Se Quarter Tak, where we bring you earnings expectations from sort of sectors, various sectors. Today, of course, it is FMCG. Mangalam is standing by to tell us what to expect. Mangalam.
Well, for the FMCG sector ahead of the general elections and after a long spate of demand weakness, the question on everyone's mind is naturally, ab ki baar recovery yaar. Well, while recovery is on everyone's mind, let's take a look at the fourth quarter expectations in three buckets. What's the same, what could be different, and what we know. So what's the same? We already know that demand conditions are similar to what we've seen in the last 3 quarters. Operating profits for companies will grow ahead of revenue. That means there would be some margin expansion. And in the consumer space itself, discretionary would do better than staples. What could be different this time around? 3 things. 1, management commentary on demand visibility may have a little more optimism than what it has been over the last few quarters. And that's largely because there's been a gradual improvement in rural with contained inflation. But at the same time, there's also some growth headwinds emanating in urban consumption. And finally, the last few quarters have been about good margin expansion. But going forward, levers for margin expansion could also be limited as companies are passing on price hikes and reinvesting margin savings in ad spends as well. Now, what do we know already? From all the updates that have come by, Godrej Consumer has reported high single-digit organic volume growth, double-digit when it comes to consolidated business. Dabur has reported mid-single-digit revenue growth. The stock declined after its update, and Marico has returned to positive growth territory after 3 quarters. Jewelry, that's shining. Titan on its huge base grew 19%. Kalyan Jewellers saw India business grow 38%, and Senco as well saw a 39% growth in the fourth quarter. So from the staple squad, given the recent trend and analyst expectations, companies like Godrej Consumer, Tata Consumer, Jyoti Labs and Honasa could be the likely outperformers in the sense that it would grow higher than the industry, whereas the underperformance from names like HUL, Britannia and Dabur as well as Emami is likely to continue. For the paint brigade, this quarter will see high single to low double-digit volume growth. However, revenues will be lower than that because the prices are lower because of raw material deflation. But for their near future, it's all about the 4 C's. Commentary on crude and competition, which is very crucial. And to wash it all down, from the beverage end of things, one expects gross margins for United Breweries to improve, whereas for Varun Beverages, this quarter may be impacted by winter, extended winter in the Jan to March quarter, but given the heat wave, they may do a lot better in this April to June quarter, the quarter that we're currently in. And finally, the key triggers that we're looking at, any sort of election-related demand boost, prediction of normal monsoon above normal by the Met, and stocks have seen a lot of time correction. Case in point, HUL and Dabur, they're actually at the same levels as they were pre-pandemic. So the question now again, kya ab ki baar recovery yaar?
All right, well, let's pose that question to Abneesh Roy, who tracks the sector very closely. Abneesh, your thoughts? And, what are the stocks where you're still bullish on? Despite the kind of sort of volatility or pressure that we've seen in the recent quarters, where do you think there is potential for maximum growth now?
Sure, thanks and good morning. So definitely FY24, we are seeing investor interest definitely improve because of 3-4 reasons. One, of course, is this time there will be 6% higher rainfall than normal. Last year, it was 6% lower than the rainfall. So clearly, the rural slowdown, which has been there now almost for 1.5 years, we expect that from Q2, that should reverse. Local player competition has been there in FMCG in few categories that will anniversarize in Q1. So again, from Q2, that recovery will start to happen and that will benefit HUL, Britannia, Dabur, Marico, etc. Third, of course, we will see that definitely pricing growth was negative for most companies in FY24. We will see because of the inflation in the salary cost and media inflation and crude also going up. We see that price hike of 2 to 3% will come back. In Q4, a lot of the results will be mid-tier or a bit weakish. So definitely HUL, ITC, Bajaj, etc. results will be weak. But we expect United Breweries, Tata Consumer, Colgate, Godrej Consumer and Pidilite to be strong. And rest of the companies will be in between. From a stock perspective, I think where is the valuation comfort? Where is FY24 likely to be delta because of the reasons which I mentioned? I think Britannia, Dabur, Marico, etc. haven't really gone anywhere as Mangalam also highlighted over the last 2 years, even Hindustan Unilever. But I think in Unilever, there is the problem of higher royalty and the GSK sales going away. So I would say that Britannia, Dabur, Marico, etc. valuation comfort and the drivers for growth are better. Yes.
Abneesh, do you have coverage on Senco?
So in jewelry, clearly the updates are really good. We have coverage on Titan, but clearly we are seeing that the rest of the players like Kalyan and Senco are also definitely copying the template and doing quite well, growing much faster than Titan because of the smaller base. So I will expect that gold as an asset class and organized jewelry will keep taking market share because still 70% of the industry is with the unorganized players, local players. So yes, I would expect Titan and rest of the listed players should also do well in FY25 because of the gold pricing, that confidence, plus definitely market share gains also continue.
Okay, all right. Hi, Abneesh. Good to see you on the show. What about Nestle? Any view out there from the FMCG pack? Nestle actually has been a relative outperformer in the last 1 year or so. Your view?
So Nestle has done well last few quarters in terms of volume growth and pricing benefiting for them. Going ahead, what we see is definitely cocoa and coffee cost as a raw material is on the higher side for them. And we will see that next 5 years, the royalty cost will go up by 15 bips every year. So currently, our pecking order in terms of good results currently and companies growing faster, we will have United Breweries, Tata Consumer, Godrej Consumer, and Pidilite. Nestle will be lower in terms of pecking order because of the inflation risk and because of the royalty cost increasing also.
Okay. Any other stocks that you track closely where you are expecting positive, earnings this season?
I think clearly Avenue Supermart, definitely the update was clearly positive. The store expansion has sharply picked up, which we were highlighting, we were expecting. And definitely in terms of the sales growth and same store comparables, also there is an improvement. We expect improvement in the margins also. So Avenue Supermart, clearly the improvement will continue. Same will happen for Nykaa also. Nykaa also, I think clearly the update was decent and last 2 quarters back to back has been good and stock has not really reacted too much to the good performance. My sense is we will see rational behavior of the D2C and that's why we will see Nykaa growing faster than Honasa Consumer this quarter. That's our expectation. So that's also one more company in the discretionary space we should do well.
Okay. Abneesh, we'll leave it there for now, but would love to have you back once we start getting results for analysis. Thank you very much for joining us there.